It's crazy. So tomorrow's gonna be a big day. Huge losses. I've survived them better than the market, which I'm kind of pleased about over the last week. But it's still a lot of red. I've still lost $7,000 over the last 4 days. It is February 27th and 28th, sorry. And this is the video log. It takes 30,000 to a million. So, sorry about that. No redos though. You know, you know how we do it. Okay, so I know y'all been waiting for this one because, like, it's been a big crash, and I wasn't saved from it or anything like that. So I'm suffering like the rest of y'all, and I'm less well positioned for this one than I was back in December 2018 when I had that real big move. And so I'm gonna take you through the account, show you what's up. I'm gonna take and I'll tell you what I'm planning on doing about it. So here's the browser. It just ticked over. It's 12 o'clock at night, so you won't be able to see the chart, but I'm sitting at 78,877, and I was just at 86,000 just like a week ago. It's crazy. Believe it or not, though, I'm actually doing better than the market on the week. So I'm down 8.15%. And if Robinhood would be kind enough to show me the list without having to click on the list. See, I don't even know how that's happening right now. But anyway, the S&P on the week is down 11.5%. So 11.5% for the S&P 500, and then I'm down 8.15. So I'm doing better. Apple had an enormously bad day today, and I think I'm trying to look at this as an opportunity. I'm down $800 on Apple. I don't really have any contracts. I have myself buying 100 shares if it reaches 265. So if it goes down another $5.79, I'll be buying 100 shares of Apple. And that's exactly kind of what I want. I want to buy some shares. I want to really load up on this company. I'm very Apple starved, like I said in the previous video. So I'm going to be doing it. It's happening. Let's see if this contract exercises tomorrow, and if it doesn't, I just get $188 worth of value here for free. Wow, it's actually I'm down, 496% on this put because I initiated in the beginning of the week. I didn't think that it would go that far down this quickly, but this has been probably the fastest declining market that I've ever seen in my entire lifetime. I'm turning 36 pretty soon, so that's a long lifetime. And I've been watching the markets for I don't know, 15, 20 years or something like that. So pretty enormous. Pretty enormous. So we'll see what happens. I have about, how much money do I have? $38,000 that I could put in towards another put sell on Apple, or perhaps just buy the Apple shares outright. And I'll see what happens then. I'll be really levered up at that point. But if you go back over the last couple months of videos, all I've been saying is like, hey, I'm waiting for this pullback to happen. I'm ready with leverage, waiting to spend it on things like Apple and whatnot. Now, unfortunately, a lot of the miners have been going down as well. Even though gold and has been holding pretty steady, silver has been going down a little bit with the miners, especially companies like EXK. I mean, holy garbage! It's down at $1.60, and that's astonishingly bad at this point. I mean, it's down 21% on the month, or 22% on the week. It's pretty grand of a move, if you ask me. So that company is down. A proper silver miner company like Pan American Silver is only down, it's down 12% today, which is pretty significant. 17% on the week, 6% on the month. So this might be a good buy for me here. But honestly, like I'm so over mining companies. I have a bunch of them. You know, I have chemical here. I have uranium companies, mining companies, energy fuels, URG, and chemical. I even have some URA still. URA basically is the ETF of the uranium business, exchange traded fund. So chemical, and I'm down like 2K on chemical right now. The current contracts that I have outstanding, I'm actually up $77 on that because most of them are calls. I have a few puts though. Here's an 850 put and a $9 put that still are going to be executing on March 6th. So that's probably going to happen. I don't see the stock rebounding very heavily on the upside. In the meantime, everything is crashing. I mean, everything is crashing. I'm talking like everything is crashing. So we got the S&P, only all the major indexes, of course, silver. Now, what's very interesting about this, even Tesla's down 16%. I'm really tired. So that's maybe I sound a little funky, but you're gonna have to deal with it. Okay. Been working all day, so everything is down. So even things like silver, but one thing I wanted to say about silver too is that it's behaving like 2008, like the way it's supposed to behave right now. So basically, after a big market downturn, it's expected that the supply of the most of the mined metals will decrease based on the because the workforce is not there, the demand is not there perhaps, or in this case maybe people are sick and they don't want to go to work, and so anyways there's a there's not enough supply out there, and but also so this would be price bullish, but of course in a down market it's actually a demand story issue, right? So the demand isn't there. So if the demand isn't there, then miners will start the price of the metal will go down, and therefore the mining companies will also go down in valuation, but they quickly rebound afterwards, right? Because then there's not enough supply for the rebounding demand, and so what ends up happening is the things like silver will actually have a really really strong bounce post correction, post bear market, and that could perhaps play out the way it's supposed to, the way it did in 2008. So it would be very interesting if it does play out like this. And for that reason, I'm going to be keeping my silver bets in play. The other thing that I'm looking at doing tomorrow, if things work out my way, is I'm going to be selling a put for Apple. If this doesn't trigger, if I happen to buy 100 shares of Apple, then I'm just going to keep them and probably not going to sell a put. But if it does happen, if it doesn't happen, I'm probably going to sell a put with a long expiration date, maybe January 15, 2021. I'm going to do it around market price, or maybe even a little bit above, like let's say $300 or $290. And that will be $4,000 in my pocket. And I've done the math on it, and it's a pretty steady stream of cash over the next 10 months or so, where it covers my cost of capital and opportunity cost and all that. So it'll be a pretty good return on my investment if obviously the price of Apple doesn't drop too far down. But I am optimistic on the company, especially seeing what kind of gains the company can do in a somewhat healthy or boosted or goosed market, whatever you want to talk, however you want to describe today's market. Excuse me. Apple, I know I'm yawning. I need to go to bed. Apple can make some serious gains. I was very surprised about its up move this year. or last year. I mean, 100% gain is really, really, really significant. And if a company of this size can make this gain, I mean, that's it's pretty incredible. I think it's got a perfect combination of growth and safety. So I really can't bet against the company. And I was just scouring about around all the other companies that could be playing around with, and I even looked at some other ones that I like that are kind of trendy with the latest generations, like Spotify and other companies. But just running through them and looking at their business and stuff like that, I just don't see like a reason why I would own one of these companies when I could own Apple. I just can't find that one reason. Sorting through it and looking at their models and potential competition, it's just there's Apple has so much going on for it. They have the diversification of incomes, they have the ecosystem, they have the brand loyalty, the built in, they lock people in their brand. They also have the product, the design, they have the technology, they have everything. And so it's everything that this century so far has been about. Apple has it. And for that reason, like I just can't see myself betting on any other company at this point. Um, Major, a lot of money, anyways. It's either that or like real estate or something. I mean, it's crazy. So tomorrow's gonna be a big day. Huge losses. I've survived them better than the market, which I'm kind of pleased about over the last week. But it's still a lot of red. I've still lost $7,000 over the last 4 days, which is a very significant amount of money, even for someone like me. Like I 7,000 dollars is a lot for me. Like trust me, even though the account looks a little bit big, that's a lot of money. Like I know, I feel it. All right, so I'm with you. Like if you're losing money, like I feel it, man. Like it's bad. But I did have some cash. I prepared for the possibility of this scenario happening at some point, and so I did have about $26,000 in cash. Plus, I didn't touch any of my leverage, and now I have deployed already a good portion of it. I bought a little bit of the stupid mining companies, but I also bought a little bit of realty income. So let me see if I can go back here and show you one company that I've been really wanting to get into it's not correcting very much is realty income here. On this is the weekly chart is down 11%, so I just bought a little bit more, bringing my average cost up to $61.55. It's sitting at 72.89 right now. So now I have 30 shares. I used to have only about $1,000. Now I have 1,846. And I really like this company because its dividend grows quarterly basically, and it pays out a portion of its dividend each month, so which is really nice to see that something's coming in to your account monthly. So I really like it, even though the dividend's low. They have a good business model. They own a lot of good properties. The management team is supposed to be like really good. So that's one company I put some money into, and the other one I've always wanted to own Rio Tinto. However, I probably picked a bad time to do it. If you can see here, I sold the put for Rio Tinto at $50, but it's costing me a crap ton right now. I'm negative 513% on that, minus $431. I'm definitely losing on this trade. If we go to Rio Tinto, you'll see that it's below $50. It's sitting at 47 right now. I sold this put somewhere around here, where it was $54, and I totally did the wrong thing. I did it like on Monday or something like that, maybe around here, and I didn't think the crash would be this big. So I should have saved that $5,000 of collateral and just employed it like now. But I got itchy, and I made a mistake right at the wrong time. Right before the big crashes, I made the mistake. So, and I didn't want to backtrack. I should have probably bought that contract back up. But I'm sticking with it right now, and I'm happy to own Rio Tinto at $50. It has a massive dividend. I want to start collecting companies or funds that have massive dividends from now on. I want some of that. I want to be able to trade and sell options against companies with dividends, so I get the double premium of having the dividend, collecting the dividend and the premium from the option. So that's kind of, I'm trying to move, and also trying to get out of just selling puts and calls on chemical all day long. I needed different companies. So that's the story. So we have a Rio Tinto play. I also have, excuse me, Rio Tinto, and I also wanted to buy the Emerging Market Dividend Fund. It's DEM. And also I'm losing, 375% on that option trade so far. So, ladies and gentlemen, like if you thought that you couldn't lose money on options, selling options, like this is evidence. This is evidence. Okay, so maybe that would be like the headline of the video, who knows. All right, so negative 375, and yeah, but I still want to own. I mean, it's got crazy dividend. If we go to DM here, emerging markets high dividend ETF. It's got a pretty high dividend, 5.32%, and the earnings ratio, price to earnings ratio of the fund apparently is like 8.13, which is extremely low. So I'm happy to own that as well. And another thing I want to own is the Russian market, but I don't think that I've sold a put against it. Oh, I did. There it is. One $22 put sold against the Russian market ETF, and I'm still not at $22, so this put is still in play, and it expires on March 13th. So see if things turn around by then, or maybe perhaps I'll be buying it at $22 a pop. I don't know. But bottom line is there's a lot of red in the sea. I got a little itchy, and I employed some capital a little too early. I was a little trigger happy because I've been, missing out on a lot of gains over the last year. And so I made some mistakes, and hopefully if I go in heavier now, like tomorrow, for example, it will pay off in the long run. But something tells me that this market has a lot more downside, at least another 5-10%, because if you look at the market, the worst technical thing that could happen to the market is to accelerate into the end of the day, because it means that it's probably going to have follow through in the last day of the week here on Friday. And if it does have a down day on Friday usually sets the tone for the next week as well. So it's not a very good situation right now. But time will tell, obviously. But I think that a 12% correction is enough for me to start making some bigger moves, and that's what I plan on do tomorrow. Hopefully, y'all are making more money than I am. Obviously, I just lost like $7,000, so it doesn't feel great on this account. I've lost more money on other accounts, so it's not a very pretty picture for my net worth at the moment. But I'm confident that I'm going to rebound back. It's going to be difficult. It's not going to be very easy. It's going to be painful. It's going to be time consuming. But with anything else, that's how it's nothing new. That's, if you want to make it in anything, that's exactly what you're going to be facing. So, all right, good luck to y'all. Hopefully, anyway, you're doing better than market and myself. Let me know how y'all are doing. Peace out.